the chase and the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time and some clarity to find your identity. It's mind over everything. I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. Don't stop. Just give me up. Don't stop. Back. I won't stop, I'ma fight until there's nothing left. And so what? You're gonna be hurting bad, cause I've been to hell and back. You don't wanna make me mad, I stay strong. You will never see me crack. And if you get in my way, you're gonna feel the wrath. Gotta say it to my face while he's looking back. Mirror breaks after math, when I hate I attack. When I feel like this, I'm immortal. I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. When I feel like this, I'm immortal. Don't stop. Just give me up. Don't stop.
Alrighty, hello, let's get this show on the road. Sorry for being a bit late, a bit technical difficulties as I was trying to get my setup running and everything as I was starting, but I think we'll be fine now. Hopefully, by the way, yeah, it seems the sound is fine. Let's hope it is. Well, today, actually, yeah, I got a little bit of a surprise in terms of the price action. Let's start off of the bottom. I guess I'm just kind of showing off that the price action is roughly behaving kind of as expected. Quicker than expected, though. Should we maybe just get rid of the drawings partially so they'll not be as in the way? No, that's not going to work. We're going to need some of them. But you know what, let's just first focus on today's price action. Really not all that significant. Not a big gap, if at all anything. Got closed immediately, kind of sideways. And then somewhat of a pickup. We were expecting that. We spoke about it all last week. It is sort of weird. Not exactly what we were expecting to see in today's session. Not in that sense that it's not what we were expecting altogether, but again, not exactly the sort of outcome I was expecting, at least today, in terms of how the structure was. But all in all, this was expected. We did speak about this all last week. Now, by the way, hello to everybody. I just kind of got started without saying hello, so hello to everybody. Oh, I see some of my YouTube members are here. Mickey Cavalier, awesome. That is, I'm grateful for you being a member. I actually am. I don't think I've seen you here in a while. So you can actually see that in that sense of why the price action was a bit surprising, because most of the bullish price action we got was in the pre-market, developing a gap that was then closed pretty much immediately just to pick back up. So although it feels all sorts of ways to all sorts of people, all in all, if you really want to be objective about this and just kind of zoom out, it is all just sideways with a lot of volatility. So it's like the market was fighting, left and right, but really we ended up roughly within the same levels. And you can see that all over the market in all sorts of assets, other than maybe very particular spots of pain, which I think Tesla was today roughly around 6 and 6 plus range. I actually was talking about how it's pretty interesting. We were expecting some of that bullish momentum, but not today. It's just sort of the market was weird today, was off. It was a mixed bag, right? And that's another reason why in these sort of scenarios, these sort of days, you want to be able to focus on the indices, on, keep your eyes on the price, right? Realize in what direction the market is going, even if you have some discrepancies on the individual assets. For example, an individual asset that I was definitely sort of off on a little bit. I was expecting the market to start breaking to around 30. KTOS broke out all the way to 32. Missed out a little bit, and that's fine. Again, that happens sometimes, but generally still made very decent money on it for the period of time I spent on it. Okay, so one second. Okay, that was unexpected. Yeah, I have a bit of these from time to time, a little bit more rare than before, but it does happen. Okay, but let's go into the market as we normally do. On the 1 minute, it doesn't really matter, although we still have a decent chunk of time before the market closes. But it's insignificant right now. I would argue from this, it's probably going to pick back up, potentially retest that bottom of that channel. Maybe even higher back into that 5700 being a very strong psychological level. And it actually involves other forces that are right nearby 5700. We don't have them on the screen right now, but still, the price level is significant enough to get retested. 5 minutes. 5 minutes appears to be a lot more bearish. That, in fact, more so implies probably this median, which is right nearby, 56.88. Doesn't really matter all in all if we kind of looking at this from an outwards point of view. I would argue that the price action will probably be between this and the final minutes of the session. So again, not that significant, 5 minutes. Now, 30 minutes starts to get a little bit more interesting because then we can actually look out potentially into tomorrow. This is overbought, right? And but then it's bullish. It is a mix because we are in overbought conditions, but then the D is overtaking and becoming dominant, as we can see. So we're kind of getting a mixed bag, or at least a turnaround, which we're getting a bit of a hint already as we're staring at it literally in live, this little tidbit, and might mean a reversal. And given the fact that we are at the top of this channel, again implies far more greater potential of more bearish momentum coming in shortly, meaning tomorrow-ish, if you will. Doesn't mean bearish in that sense that we break all the way down, right? The real expectation to the price action, if we're going to have at least start with some bearish momentum, that means we might break a little bit and then correct. The real expectation from my point of view and experience in the market, first of all, we have this little bit of a leftover gap right above where we are right now, which means let's call this 5704-ish kinda, all the way to 5740, so roughly about $36 gap. And it does make sense within the framework of what we saw in the smaller time frames, right here in the 5 minutes, how it's gonna still teeter around the current level where we're at, giving the 5700. So we're probably gonna start here tomorrow, even if drop a little bit with that bearish momentum we're starting to see right here in the 30 minutes. We still need to remember we are still in overbought conditions, and all it takes is a very quick flip over for the market to continue rallying, closing that gap, and then we're truly free. From it, at least from the nearby one, we do have another leftover gap that is sort of nearby right here. It's not the entire gap that we have to close. We have to close some leftovers, which gives us a 58.26.53 handle. And since this was already closed, so 58.12, so it's not all that much. Basically, we have their those those 6 and those 8. So $14-ish. With the cents, it's not that significant. Let's just call it, yeah, let's call it that. And it's not that far off, by the way. Again, it's around, like we said, 58.30 handle. And if given the gap that we close right here, if the momentum can pull a little bit higher, it's going to be real nice if we can close it. But to be honest, it is starting to look very, very sketchy in terms of the momentum actually having that ability to go. As you see right now, we actually had, right, the channel, the longer duration channel appear, and coincidentally, these levels coincide. So that actually may work out. There is sort of the likelihood because it fits all the narratives, right? It will close that gap, it will retest that ceiling. But then again, if we're objectively going to look at, for example, 45 minutes is very shortly, I would argue, we'll run out of bullish momentum. We're still in overbought, we're bullish dominant, but we've been doing this for quite some time, and actually, relatively speaking to the average time spent in overbought in this time frame, we've been overbought for a while. So this is weird. This is weird considering the condition that we're basically, we've already squeezed the lemon. We know we don't have enough, and we're trying to argue how that will work out. Like, it's so ironic what's going on. I have a bearish position on the market. I see more of a bearish outlook on sort of the medium time frame from here on out and everything. And I would actually be glad to see that bullish price action happen and close part of that leftover hole that we have, which will benefit me in the long run. But again, I have to be objective about this. Even though I have a negative position, currently, objectively, this will benefit me more, right? Because we want to have these closed so the market can continue downwards to close this gap. When it's done with this movement that we said, it's going to be enough to convince some of the market participants that no, everything is fine, you know, correction has been canceled, that's it, we've done all of it, from here on out, back to the moon. That sort of sentiment, we know people tend to have that. If the market is going up, people tend to have that sentiment of the market will be going up. If it's going up, then if it's been going up, then it will go up. No, if anything, it's the opposite. If the market have been going up, it is far more prone and likely to start correcting, even if temporarily and just part. Of course, that's the whole idea of a correction. It's not a complete collapse, crash, breakdown, whichever sort of definition to, because people play with these definitions. It doesn't really matter in that sense. That you really need to understand what is the bigger picture, what is the cycle of the asset, because these are all true, but not always. It's that very same sort of analogous that Tom likes to use, and it's actually a very good one. You know, every fireman has a red hat, but not everyone has a red hat is a fireman, right? These things are true, but in not all instances. There is the cyclical nature to the market, and I wouldn't say, oh, sometimes, not just sometimes. It's very predefined, exact areas where, because they're far more rare than the other spots, people tend to misunderstand what the market is truly doing. And so to trail back to what I was trying to explain with this, it's that same way again, to remove the biases. When we expect when we're seeing a bullish movement and we expect to see a certain relative corrective movement on it, we expect to see the very same thing. And until I see a full squeeze of that momentum and really see that this lemon is completely squeezed out and dead, I'll have to be objective. And I'm saying that, and we were prepared for this. But honestly, and here again, that's sort of the other side of the honesty. On that very same token, I really struggle to see how we're going to do that. And I'm all for it. I am all for the price action to be going even higher temporarily. 5,800, absolutely. But if those who remember, we spoke about 59 potentially. That is so out of the realm of possibility. I mean, that is far too far. And sure, you might think, well, Greg, if it's going to make it to that 58, you're going to say it's closer now. Now it can. Yeah, but by that point, we completely... This lemon is basically dust at that stage. There is no lemon to squeeze anymore. If we make it as high as I'm saying, which, like I said, I'm all for it. Just very doubtful it will happen. Okay, let's continue. 1 hour, again, you see the very same thing. Just to reiterate everything I just said, look at for how long, relatively speaking to how normally we behave, and even if we do prolong the process in the overbought on the hourly, okay, this is an average, sort of relative average long period we spent, which is, let's give it what, 12 bars, right? So basically about 2 weeks. This, we've been already 10 bars. So what? We can squeeze out 2 more. That gives us exactly what we said in the best case scenario. And I mean, that would be 2 really crazy bars with a lot of volume, a lot of buying volume to do that, right? So you see the problem I'm trying to tell you? It's like almost like we need X amount of material, but we can already tell that whatever we have to work with is nowhere near what we need. Not even getting there, right? So it's very weird. Maybe there is something, some event that will happen between now and then. Some report will come out, temporary sentiment change because the market kept on rallying for a little bit longer than what people thought. If it's a breakdown, it's like, oh, maybe it is a positive correction to the upside, right? So, but then again, remember, we're objective, and this does not look good. This looks like it's been too hot for too long and far more prone to overturn and start correcting downwards rather than to stay the way it is, giving us a retracement back into the channel. And since now we've opened up a lower area right here below us, we can end up basically at around 5,300 over time. Of course, it can be very gradual, retesting that ceiling, retesting that median, and only then arriving. And that depends on how quickly we'll do it. It might still feel like, 5,400-ish area, more than 53, even though it's going to be high 53s. That is kind of what we're seeing here on that 1 hour chart. It's similar again, really very neatly, as if I ordered all of this stuff, right? Just to kind of fit my narrative, or rather not my narrative, but rather what I'm reading from the market. We're about to go into convergence mode right here on the 4 hourly. 2 candlesticks of the 4 hour chart represent a day. Basically, here you have 2 candlesticks per day. Here you have 1 candlestick per day. And so right now we're already moving towards convergence. Basically, this still represents today's session. So all this needs to do is the very next session will have convergence. And if they will diverge really quickly, with the D being dominant, the red line representing bearish momentum, that means we're far more prone to correct downwards and not fulfill that whole going higher to the median of the larger channel, right? As you can see right here on the screen. It's very weird. Maybe there is something in the works that I'm not considering, some event, some report. But like I'm saying, basically I am struggling to see how will the market have enough momentum to make it back, to make it high up there in order to close the gaps. And I'm basically more so seeing the far more likely scenario of the price action breaking lower, right? I'm just, cleaning this up so we guys will have a better sort of view of things that are going on. Although I think I may have exaggerated and just deleted everything, even stuff I wanted to. Oopsie daisy. Yeah, I might have just, no, should I? What? I mean, look, in fact, it seems, I'm pretty sure we haven't done this today, because I'm pretty sure I haven't used this color palette today. But like you see, we already literally predicted this. And as I tend to draw these out, right, sort of as I tend to just kind of draw them outwards further so you guys can see. But here you can see, here, that very green thing was potentially implying that we will start correcting to the upside. And as you can see right now on the screen, that's exactly what happened. So we ended up, it's a very simple equation that happened here. We tested the bottom of the channel and started correcting to the upside, right? Which also falls in line, as we said, very neatly with the idea, as you see, this is what I was literally explaining back whenever I was explaining this, that we had a significant downwards movement, and now we're going to have a corrective movement that's going to be a little bit more significant than those, but still will not result in an overall breakout, but rather probably testing that junction, maybe even crossing above it to test sort of on the top level, on the ceiling, but then gradually starting to break down, potentially closing both of these gaps that we spoke about, right? So that falls in line very neatly. The only problem is that we barely have any momentum to do that. You see, that is the problem. It's like, yes, the thesis is cool, but for that you need momentum. It's like, I like your plan, but we need fuel for it. Okay, so that's kind of the idea of what's going on there. On the other hand, if we're really looking at the daily, it's still very bullish. But I would argue, like I said, even if we have a little bit more, I don't think this represents the whole way through, and I don't really am not seeing how we're making it towards here. You'll see why, because we're surrounded, like that daily is surrounded by bearish momentum. So this is mitigated by the overall environment. And so if anything, I'm arguing that this is probably making, this structure is making its way towards the 50, which if you can see, it's already not that far off, 47.70 range. So probably by tomorrow it's there. The D is lagging behind the red line, the bearish momentum, or so basically 25.69 lagging right behind it. The slow, and so basically once they catch up with one another, there probably will be a crossover right here to around 50, which will result in the price action taking a dive. Again, I'm doing this, I'm presenting as if it's going to take months, more so like this, right? If anything, convergence, divergence, tracing back into oversold conditions and continuing the breakdown that we were saying, or something akin to this, something of this sort, or something of this sort, right? Although I feel like I'm being far too generous giving this angle to the corrective movement. This is far more likely and far more probable, but again, could be. And I'm just gonna leave those both on the chart now to emphasize that there's a probability of both scenarios happening. What else we're seeing? Here is where things start to get more stinky for the market and the people who are bullish on it right now, is that we're already having a bullish crossover, but then again, it's probably going to be temporary. And remember, the real problem with it, that all of this is happening on the bear's court, right? Where we're in the on bear's turf. So even if it's going to be just, so this is bearish with some mitigated temporary relief, which guess what, we know, and we spoke about it all last week and we're in preparation. In fact, if, most of you remember, that's where I made the video about how I warned everybody about this very same scenario that is going to happen, and people did not listen and made a mistake. In fact, you know what, let me just show this. Here's the live we're having right now, and this is the video. So urgent warning, and I kind of made this thumbnail with, I warned you it's coming, but you didn't want to listen, and the emphasis on didn't want to listen, and that's why you didn't listen. Not you, my community, but the people sort of outside, right? The people who maybe got to observe my channel and didn't really take it too seriously, nor my analysis, because it didn't fit what they would like to see in their portfolio. Remember, we don't play that game of the market basically doesn't care about your portfolio, doesn't care about your retirement plan, doesn't care about any of these things. So what we do is, instead of hoping the market will work out the way we want things adjusted to our sort of benefit, we adjust ourselves to the market, and then the money is slaving for us and not we're slaving for the money, right? It doesn't make any sense. The whole idea of the market is to make money for you and not for you to slave more and more and more harder to just put more money into the market, right? And the emphasis here that it's basically people are about to do the very same thing. Now you're about to do it again and again. It's plurally speaking, not to you. Hopefully my members, of course, listened and paid attention. And again, this is another thing. This is actually why the thumbnail today implies the idea of gambling in the market. And I think right now what I'm noticing in a lot of communities is basically almost this circle jerk kind of thing that's going on, that people are basically telling each other, you know, there's a big difference between something, I hate to admit it, but the reality is that when I used to work for the industry still, sometimes we still had to just hold the client's hands, you know, just not sort of to prevent them from making mistakes. That's kind of how we defined it, hand holding, right? Basically, there's no positions that are being opened. There's nothing that's really being done. It's just preventing the client from having itchy fingers and making dumb rash decisions that are not anchored in any logic or or any analysis of any sort, not even technical, not even anything, right? And so sometimes that's actually was part of our job, right? And I think right now what I'm seeing in a lot of communities, in a lot of places, people are doing that, which is to some extent that's great, to some extent. But there's also the sort of convincing process that is going on, that people are trying to convince each other or themselves that because they hold up as a community and have this hodl mentality, the market will do whatever fits their narrative, their retirement plan, as we just mentioned a couple of minutes ago. And they're basically holding on to sheer hope. And it's a very, very problematic thing to do, especially in this market, because the market does not care. We are now going through a cyclical sort of price action that is predefined by things that the average person, the retail, who's not aware of technical analysis, does not understand the source of. And everybody has all sorts of justifications and excuses to how it's this event, it's that event, and please explain to me, how was I able to pre-predict these things will start happening, this exact price action, far in advance, and I keep on doing it on the daily basis, right? But how was I able to predict these things when the events themselves, we didn't even know if Trump is going to win. How was I able to predict all of these events? You're going to say, well, of course, Trump is doing that. Back then when I started sort of, giving you this narrative, we were even far away from the elections. What are we talking about? We couldn't have perceived any of these events. So technical analysis absolutely does work. If you do, as Tom said once, it's like leg day. It's hard and no one likes it, but you better do it, otherwise you're going to have these chicken legs, right? You can't expect yourself to be a runner or have strong legs, right? And you're going to look weird. You're going to have this strong upper body and chicken legs. And that's absolutely a thing. And you know what? I bet that even the people who are like athletes that have to do with something that, with their legs, right? Just if it's runners or whatever, I bet that, I don't know which amount, but not every single one of them likes leg day, right? And not all the time, but you need to do it. Otherwise, you will not be able to understand what is truly happening. You will completely be chasing this sentiment in the market of this guy said this guy. No one cares. No one cares who said what. You know what we care about? What they do, right? Because I can tell you a billion and a thousand, billion and a half things, right? But it all comes down to what am I doing, what kind of carryover effect it has in the market, and whether you're prepared to endure the pain that it will bring about. And in my humble opinion, most people are not prepared. They don't understand the sort of pain that the market will be going through in the upcoming couple of years. And so it becomes this, instead of actually warning each other, right, it becomes this reinforcement sort of therapy thing that leads to people making incorrect decisions, in my opinion. Of course, people will argue different, strategies, different approaches and all that. And I totally understand that. And I agree with that to some extent, but not with what is predicted, not when the tools to analyze and understand what is probably to come are out there. They're accessible. They don't even cost $1 billion. In fact, by the way, which brings me to my next point. Boys and girls, quick reminder, I was planning to close the academy this weekend because I was just slightly busy and again with other students and things, people who were signing up. And so I still have one spot. I still have one spot available, right? I just spoke to one of my other students who were sort of, when she had to finish some personal things before she was able to finalize sort of the subscription process and everything. So as far as I can tell, we're basically a step ahead, away from getting started and everything. Although her spot had nothing to do with the two other spots, but another spot was taken basically. And so what happens is that I'm down to my final one-on-one spot. In my I'm just down to the final spot in the one-on-one Technical Analysis Academy, in which I basically meet up with you in the Discord. I share my screen with you. We use these tools. We use more advanced tools. We discuss the why things do the way they do, what tools we need to have, what price or precursor knowledge we need to have in order to start reading these charts in a more of an advanced fashion. And like I said, I teach you one-on-one in an interactive session, not just a video or something you need to watch. No, me and you, me sharing screen on the Discord, showing you, teaching you step by step how to do this. And I'm not going to promise you some weird promises like once you finish the academy, you become a super duper day trader. That's not, first of all, that's not the intention at all. But you're going to have a skill set that you'll still have to practice for, the same way when you just got your driver's license. You're not the best driver in the world. You're just a dude with a driver's license, right? Now you have to practice to be a good one. And so that's going to be that very similar process. That's why the One-on-One Academy members get lifetime membership, and you can continue hanging out with me on every single day basis and asking questions, so I can then sort of reinforce, make sure you're not getting rusty. We can practice, look at your own charts. You can see mine. I can look at what you're doing, assess, and really have that interactive process in which the end result should be that, how people say, don't give a person a fish, teach them how to fish, and they'll be able to feed themselves forever. Or, don't give a person a bowl of rice, teach them how to grow rice. That's literally the intention. You can ask my students in the academy. There are a couple of videos I've already bragged about all the reviews I've had so far. And yeah, that's kind of a bit of a shout out to the academy before I forget. And that's it. I mean, I think we got the sentiment down to a T. On the monthly, nothing changed, boys and girls. Big surprise, right? We're still waiting for the end of the month, 14 days. The sentiment still as stands as was. We're moving towards the 50 range. We might get some entanglement here, so a little bit of a pause. We'll see how things will behave. But overall, the direction of the movement should be headed towards that 20 over time. And once the closer it gets, the worse it will get in the market. And when we do, we'll probably complete that process of movement towards the 4,700, as we spoke about in previous sessions. 4,700 on the SPX, right? Will correlate with downwards pressure on the vastness of the market. And when that will happen, we'll be able to determine whether I'm right and the downwards pressure will continue. In fact, you can see right here there are markings in advance, right, that I already prematurely made talking about these levels. And when this will happen, we'll be able to determine whether the pressure will continue. It will get a lot more painful for longer, because those who remember, there are still time frames that need to readjust, or rather, in fact, some of them are already showing potential significant pain. The very same sort of methodology we just spoke about right here. You can see the stochastic RSI is not able to break above the 80 on the quarterly chart, which is basically a very prolonged indicative price action tool. And if this turns around, we're going to have, if this is just getting started, right, even if we're going to complete the 47 movement, we're not even yet nowhere near the 50 range. And all of you know we have still very bearish pressure also right here in the form of the half year. And the 1 yearly chart right now, ironically, because it has not readjusted yet, because it takes quite a while for it to readjust, appears to be kind of neutral and uncertain, but really it's leftover remnants of that bullish trend that we've had all along. And since right now we're going to be seeing a lot more bearish pressure in the upcoming months, when this will be readjusted, it will appear to be a lot more bearish. So you kind of have to understand the context or what it is that you're looking at and why it appears the way it did or does. Or when the market goes a bit too far too quick, it may appear sort of in this, dare I say it, misleading way. Okay, so that is that. I think I was able to plow through this rather quickly. I'm going to take a quick sip from my Coca-Cola here, and if anyone here wants us to check out some individual assets, now is the time. Otherwise, we're gonna adjourn this meeting early. No particular reason. I'm actually feeling quite well. I'm feeling a lot better. It's just that I have a lot of stuff to do still. And if it's not urgent, I think, we can adjourn today's meeting, because honestly, it's not like we got anything too surprising. Those who don't know how to reach out to me about the One-on-One Academy or any other topic, you simply join my Discord, which you have the link in the description below at the end of the video. Go to my Patreon if you want to sign up, and basically what you do is you go and you join the Discord, and then you will see these two channels, the left click me or this or whatever, and need help, And then, well, first of all, this is how you join, how you use Discord, all sorts of advice, tips, and sort of intro information. This is how you connect your accounts if you're already a patron, a must-do thing. Otherwise, you'll be left out in the hallway, the doorway, if you will, right? And if you want to inquire about the One-on-One Academy, it's pretty simple. You'll join in, you'll see these two channels. Like I said, you go to the Need Help, open a ticket, right? You click this, there will open a ticket. Then once I'm available, I'll talk to you, and we'll be able to have a one-on-one conversation. I'll break it down exactly how it works, so nobody here feels left out and no bullshit or something. Here is the price. How do I sign up is the very same way for everyone else, including my Patreon members. Basically, DM me so we can have a call for Q&A during which I tell you how. Okay? That's it. That is pretty much the whole idea. Okay, so we're seeing some tickers. Give me a second. I'm gonna get to the tickers, and yeah, that's that. Do that. Join here. And that's how you can talk to me and inquire about the One-on-One Academy, which I remind you all, one final spot. Once it's locked, and probably going to be staying this way for some time now, simply because the Academy is full. Okay, now let's go to the tickers. Stickers. Let's go look at stickers. Let's look at the tickers. So we want GLD, not GDX. We want, you know what, GLD. I'm going to start off of that since we're halfway there, right? I mean, given that gold is trying to breach that 3,000 threshold, it's not all that surprising, right? So it kind of makes sense. Let's try and see what we can see. I would argue, I don't fully agree with the tool we're seeing on the screen, but I'll tell you what. So 4 hours on the upper side of things, it's on a bullish sort of momentum side of things on the 4 hours, and on the daily chart, it still has more bullish momentum, as I suspected. Sort of because of the structure, it makes a lot more sense that GLD with gold will be pushing to 282, given the 3,000 threshold on gold. So that really makes sense. Again, we're really bullish right now still and haven't yet penetrated overbought territory. Of course, retest for some time before breaks potentially. Maybe blow off top, we'll see. In the long run, sadly, this is something I partially agree with. This is, again, broken. This thing sort of over assesses. You know what, let's just see if I can open it here, so it's going to be less complex for the viewers. Those who want to know what that is stuff I teach in the academy. That is unique special knowledge, you know, the holy grail, super duper tools, the crystal ball of all. No, I'm kidding, but yeah, those are more advanced tools that I'm not going to try and even try and break down right here on the live. And plus it's partially IP, so yeah, join the academy, I'll teach ya. But to put that aside, let's look at Julia. I see I already had should have gone to this chart anyways in the first place. That really works well with my thesis, and like I said, you see, so we're testing highs, channel, probably breakdown, gap, absolutely makes sense. Haven't I predicted this exact thing? I have predicted this exact thing before, and so I'm not going to redo it. As you can see, I said basically get to that ceiling, but then start correcting, probably to 250 with gold, which plays along neatly with what I'm seeing in the last several sessions. And for some reason, I claimed that it will keep on staying in that range forever. I don't know, into oblivion, it seems. No, I'm exaggerating, probably just out of the picture. Okay, so that was that was what I was thinking with regards to GLD. Has anything changed? No, I don't see anything any reason to think that anything has changed. Normal, yeah. I mean, we reached that ceiling, the 275, having a bit of slippage, totally normal, absolutely normal. Like I said, a bit of a wedge maybe test. But so all in all, the overall point of view is that we've been running hot for far too long, and subsequently we'll start correcting, and that bearish pressure will create a movement either towards 250 or 240, depends which one will be, or maybe even both. Or maybe probably there's high probability that even among these columns that will have to the downside, one of them will have enough pressure to test that bottom just to trace back into the channel, like a scared turtle, right? And then maybe show respect to that median channel right back up. Gold is far from over and done with what's coming in the following months. It's just that right now it needs to drop to have a bit of a corrective movement because it's been running too far, too fast, too high. Okay? That is GLD, which, look, bad words, you should know that by now. The idea is very simple. You're gonna have in GLD a very similar, borderline identical movement with gold. So if you really want to know what GLD will be doing, just go to the source, analyze gold as is, and then yeah, you'll know what GLD will be doing, and just take your signals, take your cues, so to speak, right? The signs from the source rather than from the derivative, or the ETF in this instance. MDAI, is that what is that? Is that like AI on MDMA? What is that? MDAI? No, it's just medical doctor probably. I'm just kidding. But or maybe it is. It's an AI that is on MDMA. It's an AI that is on ecstasy. That's what it is. Now, that is just not what we wanted at all. Now, this, though, is better. This seems to be not something I would touch with a 10-foot pole, but, you do you. I'm not going to tell you what to do. What I will say that on the daily chart, it appears to have enough bullish momentum to what I would argue again retest that very same channel we've been moving within. It's been moving, as you can see right there on the screen, pretty evidently. So it's not going to be all that surprising if it's going to retest. Potentially going to break out. This structure is very, very indicative and potentially will bring about the market retesting that wedge to an upper breakout. It's almost like the market taking that left shoulder in order to move higher, rather than sort of sticking around even with a small retest just to potentially break lower. There are various ways in which it could have done that, but if it will be running higher, which it appears to be that it will, for some reason MDAI appears to be that it has more bullish than bearish momentum right now. And maybe, I cannot tell you for sure, but there is a chance that maybe the market is trying to pull up to the end of the channel here. If it will end up parking on top of it, you could maybe consider looking at this, but damn, that's weird. The reason being, let's see. No, I actually miss. Well, maybe. Let's see what the quarterly is saying. Well, I don't have enough data. I've assessed it incorrectly. I thought we'll have a lot more bullish momentum on the front end of things. That is actually not that great. That means more volatility moving through the wedge, and only then get back to me, I guess, within a couple of months, a quarter, to talk to me about it, unless it breaks out. But that's probably the other ugly side of things, is that all of this is very, very hypothetical. And looking at what I'm seeing here, you could be dragging out to forever in oblivion, and you might have some really decent rallies right there. Maybe we're testing that high, 345, 350, 360, whatever. testing that, moving into that wedge and testing the resistance totally makes sense, and that could be why I'm being misled by that bullish momentum seeing and thinking it might get even higher. The real interesting issue here is that this structure with this sort of breakout could actually mean a temporary relative decent rally, which actually amplifies that idea of closing that gap that it's had around 10, I think. But you'll have to get back to me on this one. This is very sketchy, and I think I would have just preferred to go with something else that I would be more confident with, because this temporary pickup does not mean anything about this. And before this and then, you have basically the greater part of the year still, like 2 quarters try. So, yep, well, there's ish, right? But still, the better chunk of the year, if you will. Let's see, what else do we have? Nike. Actually, I will be very glad to look at Nike. I can tell you that just the other day I was at Nike and I bought 3 new pairs. And one of them is the very same pair, not even in different sizes. It is exactly the same pair. Like, I bought 2 identical pairs and another pair that is also that very same identical pair, just in a different color. So, I mean, it depends who you ask. It's basically 3 of the same pair. Now, why did I do that, you ask yourself? It's because they had 30% discount. Now, how does that have anything to do with everything? Well, first of all, the store was absolutely full to the brim. Like, it had to fight people over. And I can tell you that Nike did not erode in terms of, the way public still sees them. They're still a highly sought after shoe, whether it's people who like vintage shoes from Nike, whether it's people who like the modern styles. The trick with Nike here is that it's an everyman shoe. And of course, we're going to look at the technical analysis at the end of the day, because that's what we're here for. But on the fundamental side of things, fundamental story rather wise, if you look at what they are and where they're headed, absolutely always like Nike. Why am I deleting stuff without realizing what it is? I like Nike, and I see that I was warning here that Nike could be getting into deeper water with the market correction, right? And here it is. And we're going to look at it again. Let's see if I still think so. Well, first of all, I did skip the weekly far too fast. I wouldn't want to do that. So weekly definitely interesting. Okay, so given the amount of momentum that was burned so far and how low we are, dare I say it, this easily means that we're going to retest this, right? So this downwards pressure, it's time to retest downwards. I mean, it appears to be that I may have had the right idea, but I just went too far too fast, and subsequently this form has nothing to do with reality. This may have, it's shorter range, and I suspect I know what I thought about it here and why I thought that. But let's just, reanalyze, right? So on the weekly, more bearish pressure. I'm not going to be surprised if it's going to retest that 66 level that we have, 66.88. Given that it's a very strong level with a Fibonacci ceiling 74.32 level, right? And we're kind of below it. So in essence, we already are exactly inside of that channel. The real question is what is going to get retested here, whether this wedge or what, right? Like so. And let's put this question mark. Now, what can we see on the monthly though? The monthly is upwards. It's rather bullish. But given its structure and given how affected it is by the overall market, I would still argue that the overall downwards pressure still stands as was expected. And so maybe even if you're going to have some temporary rally and you can like make, what is that? $3, $4, $5 on a good day, 15 on a good day, and who even says you'll be able to get out and even notice this? While on the other hand, you can lose a lot more. You can lose slowly over time, and at first it's going to drop just below your entry point, 67, and so you're going to feel locked in, and eventually it will start dropping lower and lower to around the 50 area, at which your biases will not allow you to sell, and take a loss while you were already not willing to sell at a higher point. So how the hell would you be willing to sell at a lower point? Doesn't make sense either. But realistically speaking, Nike still may push higher within the confines of this triangle shape that I've pointed out. All in all, it is bearish with, I would say, maybe a couple more months spent in oversold conditions. So even if entangled, the end result will be, like I said, something more akin to this. Even if it's gonna retest and sort of spend on some time, maybe I exaggerated, okay? So you get this idea. Although it doesn't go to the left, it will never go to the left, okay? And I should be done with the old stock. Oh, absolutely. They're doing that immensely so well. Like they push the old stock and go more premium with their own outlet and restore connection to their partner's new CEO is their old CFO. Or something like that. Okay, gotcha. Now, Nike have really amazing self-preservation skills. They really know how to capture the market and how at the right time. They've been doing that for a very long time. I would be surprised if suddenly they get a disease in which they forget how to do that. So in my opinion, in the long run, Nike is a goddamn awesome buy. It's just that it still feels very high. And if you'd be rushing into it, this is what you'll experience, and I don't think it's necessary. Considering that the stock will probably drop lower, and then you just pick it up at a significantly lower price, even if it'll be doing sort of, at face value better and succeeding in all their endeavors, which is good. That's even better. That means there's a future value that is still not priced in as we go. So that's even better. So for the time being, again, an overall drop down in the long run, probably potential profit. CRM. Let's do. Tesla we've already done. Yohanan, I will do Tesla for you, but we already done Tesla, kind of. It's the very same thing. Tesla goes with where the market goes. Whenever I do the market analysis, although, you know what, I'll take a look at them individually, I understand, but normally we look at the SPX, the S&P, to cover the overall perception on how the individual assets will be doing, but absolutely, we'll check it out, Tesla, for you as well. Let's see what CRM is doing. CRM is doing... Okay, so we've hit that saying, and we knew it's probably going to be very likely, and then magic, below and behold, started breaking that. I'm not even going to tell you what that reminds me, and like we're above that. We're above that. Plus it's a bad joke. But bottom line, is like everything else, you probably will be going down. You already have that bearish pressure, which easily says 246.15. If you're looking at the weekly, you are definitely still oversold, and so subsequently will be dragged downwards even further. That confirms that 246, right? So kind of everything on CRM right now, again, that just sort of shows weakness, entanglement in the current current support, and if so, more bearish on the front end of things. It will just simply fail. We'll try, absolutely, but then fail, and we'll be testing that 246. The real question then becomes whether it'll make it to that 204.77 or 194.65, right? Which we know is a very probable strong level, given that it's a golden pocket. It is right here. You can see how effective it was before, and again and again and again, from both ends, right? From the top, from the bottom, on all fronts. Let's see how our monthly doing. Yes, our monthly is far more bearish, which coincides at least a retest of that level, which is the bottom of the channel, the monthly. Inherently a very strong one. So again, the market likes wedges, boys and girls. We know that, so it's not going to be all that surprising if that's going to be the exact structure the market will tend to have, simply because that's how the market tends to behave very often, get locked into retesting the channel in a very narrow sort of wedge, narrowing even more so this wedge formation, tests it, oftentimes get rejected, fails, retests the very same support. When you have so much bearish momentum, of course, it takes time. Let's see if we have confirmation on this front. This is a little bit interesting, actually. This is more bullish than bearish, ironically, but still not a good thing to see. Just kind of getting this stutter right above 60 within the realm of, within the more positive realm, again, as we say, anything above 50 and on the stochastic RSI represents bullish momentum. It's bullish at face value, but from this clear divergence and clear-cut trend up, you're going and making this dolphin pattern shape thingy, right? So that's, that starts to look sketchy. So again, you see how the trend transitioned from being an uptrend to slowly slowing down and taking this sideways approach, right? The flattening of the curve, if you will. Right, Tesla. Let's do Tesla. Let's do Tesla real quick. Oh, what am I doing? I have Tesla here. Tesla, I mean, we kind of... Oh, right, I forgot. So I know it might be confusing for a little bit, but yeah, let's just try and get you refocused, if you will. What am I doing? I want you to remove hide drawings. So on one hand, appears to be, just moving downwards within this current channel that we've been moving within several months now. So nothing surprising, right? All in all, even if when we transitioned here from, but this was predicted. But really, if you look with the drawings, we were predicting this. We were saying, look, the price action appears to be very bearish and may get you locked within the confines of this channel, as you can see, roughly around between the levels of 246 to roughly around the levels of 333. So very wide channel. In fact, we said here it's not going to be all that surprising if the price action throughout this process, when we're going to have more of a bullish period, may find itself doing this sort of bullish momentum temporary channel just to break back down, but overall keeping confined to this sideways channel, like we said, between 3,300 and 256. Deeping and diving downwards with the market dips, but still staying more sideways and more flat than anything else, with high volatility, sometimes even maybe resulting in higher highs, not higher highs, or rather temporary higher highs, depending on where you compare to. But basically give this pseudo feeling of a rally, which will end and result very miserably. What ended up happening is this, that it almost appears to be like my thesis, very similar to my thesis. It's just that my thesis would have been that we would have been moving in far a wider channel and higher than we currently started, basically a whole step above. Since the market basically broke down even beyond what I've expected, so below that 246 level, you might as well consider the price action currently to be stuck between 246 and 221.26. Okay, that's kind of the levels that you have right now, but it's not the end all be all, and I still stand by the thesis of the price action breaking back up. Maybe it will take a while. Maybe I may have exaggerated or had expectations to Tesla that are a bit high, more than the ability of Tesla to actually do, or I have not calculated, priced in, the self-inflicted damage that is done by Elon and the various, again, strikes that are happening right now and everything that he's doing, which is good. He's trying to, make the country great again, or at least rather help Trump do exactly that, and people are hating on him. Of course, if you're abusing the country one way or another, especially the economic system, you have no right to complain that you were caught and now is out of you're now out of this freebie way of making profit, right? So you shouldn't be happy about it. In fact, it's good that they're doing that because that allows the U.S. to preserve more money, not to waste on dumb things, which will result in positive results later down the line. Uh, so all in all, I think, just to be absolutely accurate in what we're seeing right now for the current price action as things stand, horrifically on the 4 hours, it's even more bearish, which means probably 227 again, right? In the really near-term future. Then on the daily, what you have, let's see what the daily says. The daily says that we're starting to run a bit hot. And so again, that kind of confirms that downwards pressure that we saw back to, what was that, 220-ish kind of area, 200 something, 200, yeah, 16-ish, 20. But then again, here is the magic. Here is sort of the thing that plays very neatly with my thesis, right? And I know you guys have been waiting. You're like, where is this, blah, blah, blah. Here it is. Here is an uptrend potential impulse or wave that is getting ready. And once they break out and start moving, you're going to see that upwards pressure take off and potentially arrive at that 333, like I said. So there is enough significant bullish pressure on larger time frames for that for Tesla to do that. Still, let's see if we have any confirmation on the monthly. Monthly looks horrible for you. That is so bad that I can't even describe. But I mean, because it's bearish dominant and very clear wide divergence, implying that there will be far, far, far more bearish momentum than you wanna potentially see. And again, I hate to say it, but this easily shows how the market can make it to the handle of 180. 190, low 200, not low 200s, high 200s, pardon my French. Yeah, that is something that is definitely doable through this monthly time frame, which means this bearish momentum means bearish for longer, and not just longer than longer than what, than all other smaller time frames, significantly so. And so that means again it will result in a lower price when you're already barely holding at 237. So this is more significant than just that's okay, there's just a retracement to the levels to the 200 handle. No, that's actually that appears to be like Tesla appears to be like it wants to continue down a lot more than the other assets, I gotta admit it. So within the context of this does not surprise me all that much. It kind of plays along very, very neatly. And so even if Tesla going to have a significant, rather to some people, retest and rally with Tesla, the end result will be very painful. In my humble opinion, that's how the technicals are setting up. When will SoFi bounce back only if there is a rate cuts as far as the 2025? I mean, technically, yes, but it's not directly correlated. And if the market will be shitting a brick, SoFi will be shitting a brick with the market, regardless of what we do with rate cuts. And you need to remember the rate cuts that were done were not done because they actually fix the problem, is because they cannot run the economic system so hot for so long, because it will break the consumer, and if the consumer breaks, the economy breaks. And so they had to pause, otherwise the market will just shit a brick. Basically, it's not like inflation went anywhere anyways. In fact, on some fronts, speaking of, people are being misled by some discounted products that we're seeing right now on the shelves, but it's because they got stuck with stock. It's the supply chain issue that is still, by the way, lingering and prolonging everything, making it slower, more expensive. Still there, by the way, believe it or not. We're far from having our supply chain back to normal. Yeah. Okay, I think since my battery is starting to run low, my battery, not the computer, my personal battery, right? The robot battery is starting to run low. I'm gonna finish up here with IC. Mike, I think, wants, right? I think it was Mikey who wanted Nvidia and Microsoft. We're gonna do Nvidia and Microsoft, and after that, we're gonna be off for today. I'm gonna do that. You're welcome, Yohanan. You're really welcome. Again, you can feel free to ask me. I know you are in the Discord. You're one of the members of the community. Feel free to reach out to me when we are there in the morning. We can discuss Tesla gladly. Tesla is in a bit of a pickle. It's self-induced by Elon, and so market can be more volatile about it, right? The overall result, it seems that we're moving towards the end result, if you will, 100, maybe lower, 90 to 100. That's what it seems to be right now. But as many people think I hate Tesla or a bear or some weird shit like that, I really cannot care less. That just goes to show, that just goes to show the market is not exactly for them. I'm actually tremendously bullish on Tesla. I wish Elon would be operating differently in various terms and various sort of things. And I'm not going to play the game, oh, he's autistic, he's allowed to. It's like, I don't think he's autistic. I really think he's just socially awkward. He was just socially awkward when he was a kid. And I think people misinterpreted this incorrectly, right? Just kind of, I'm just my humble opinion. Just saying, don't hate. But regardless of that, I still do think Tesla is still in its diaper phase. Basically, it still is a baby company, if you will. And Tesla will grow tremendously when will come to Optimus, the robots, basically the vision, the energy storage. The vehicle sector, of course, is tremendously important. Of course, absolutely not even a question. It's just that I don't think their greatest revenue will be coming from new Cybertrucks, but rather from other probably fronts of their business. Just saying. And I think, of course, there's other future things to happen with Tesla. We don't want to speculate them on. We cannot price them in. But I do think that over time, as long as they will be the inevitable future of Tesla, the higher price is inevitable. And so, in my opinion, when now I'm going to be getting the lows that I expect to see, I will be buying back into Tesla personally, and I'll be posting about it in Discord, of course, notifying when and how much, at what price and everything. And in the community on the Discord. Where do I do that? I do it on the Discord. There is a dedicated channel on my Discord to my community members and academy members. It's a channel that is literally called Greg's Positions. Guess what I post there? And so Nvidia, like the rest of them, just kind of, go back to Nvidia. Very much like a lot of these assets, it's just that when we're looking at Nvidia, the lows that we expect are kind of far lower than the 100. A lot of people really want to just kind of, hope and pray everything's going to be fine. Nvidia will drop maybe to that 100 range that Greg spoke about, maybe 90 on a very bad day, and that's it. It's all said and done. I'm not going to break down the whole thing right now because it's going to take forever. But the bottom line thesis is that like 34, 41 handle. Just saying, don't hate. That's just what the technicals are showing. But you cannot see it right now because we're not looking at Nvidia through the lens of Nvidia's technicals, but we're looking at Nvidia through the lens of the technicals we get in the indices, and how long and how low can they go, and how will that play along the side of assets like Nvidia. And now if you're going to look, for example, just on this chart right now, if you realize that just a tiny movement and impulse downwards already as it stands bring you to 100. So what, you're planning for the market to crash several $1,000s and for Nvidia to huddle along, if you will, and maybe just stay hidden around 95, 91, 90 handle on its own, just kind of like, yeah, I'm comfortable here. No, that's not going to happen. Nvidia will break with everything else, and the further out you see, the further out you're going to look, the more bearish it appears. So what we're experiencing right now is merely a partial step within the beginning of the overall corrective movement. And we spoke about this in the community as well. And I said this, when the asset tends to run like this, you tend to pay for it around the corner. That's always the case. So to speak, around the corner, time goes by. Some of the things, some of the factors that brought this price about and were priced into make it make sense have turned out to be not true, for example, or exaggerated, but the price didn't ever correct. And more so, people didn't really realize what they were factoring in, as much as they were just paying attention and hearing how quickly Nvidia is rallying and how they're missing out, and how lots of people are just, these talking heads in the media and whatnot were saying, yeah, buy, not knowing anything about anywhere. And of course, at all ranges, even when we were higher, right, when we're hitting top. They couldn't see it's a top. For them, in their mind, we've been going up, that means we're going to go up, right? Into oblivion, right? That doesn't really the way it works. But so, yeah, Nvidia, just like the rest of them, with the rest of the market, in fact, here it is. We literally have it already in advance, prepared, so to speak. How we're moving along and starting to have more of that dominance of the bearish pressure that will slowly but surely will take us out into the body of the stochastic RSI below the 80, signaling that we're slowly moving towards the 50 breaks. And if it does, we're basically in bearish territory, and the more bearish we become, the more bearish the price action. And so to bring it down to a nice bow, if you want to wrap it up with a bow, we're currently looking, based upon the current structure, the indices, everything else, everything included. I am personally, we as a community are aware of this, but that's my thesis, my personal point of view, is that we're going to be seeing 30 handle. I know it sounds excessive. What is really excessive that people don't realize is that rally that we had in the first place. Any normal stock does that for almost, of course there are exceptions and sometimes things happen in the market and all that. Is that justifiable, and is that truly worth it and makes sense? Well, no. Very much, horribly overpriced. Not just overpriced, horribly overpriced. And we're now just kind of slowly getting closer to balanced and ground level normalized, sort of considering all the factors in. Yeah, that's all it is. So Nvidia, of course, is not dead yet, and it will not be, I hope or think. In fact, I think Nvidia will be doing just fine. It's just that the reality is going to be very painful of how low the drop can be when it will come to fruition. We could be looking, like I said, at 40 to 30 range. I think, in my humble opinion, as things stand, it's somewhat the lowest range we may get. As time goes by and the longer it takes, the higher that floor will get. And so, well, maybe not 40, maybe 50, because it's going to take a long time. Still, it's horrible because it's going to create a drop of over 60% for most portfolios. Just saying. Right? And on your ROI, it will not look so pleasant. That is Nvidia for you. Where was that? Right. I think, what was it? Right, Microsoft. MSFT. MSFT. Let's look at this at MSFT. This is flat like a pancake, or like the south, as some may say. That's bullshit. There's plenty of mountains in the south, maybe particular areas. So I'm being a moron. Just ignore that. Ignore the previous comment. Inconclusive. Bearish. Bearish, objectively, roughly 2347. That totally makes sense. I don't see any issues with that. Bearish and so negative, close enough. And probably this is your destination, if you want to call it that. That confirms that very much so. That is that bearish pressure. And not even being able to pick up. It literally looks exactly that formation of corrective movement as I told you. So basically up, corrective movement, but now it is not just correcting, it's also continuing, it's staying within the confines of the oversold territory, or at least moving closer with bearish, the D, the red line being dominant, representing more bearish momentum, so more selling in the upcoming months, because remember, this is the quarterly chart. And even if you're going to get some volatility into the up and down, I would be more attentive to this, and that totally makes sense to me that the market will consolidate, will create this sort of head and shoulder formation of sorts. Here it is, very similar, right? I'm not going to be surprised if you're going to do this sort of thing here. That totally makes sense, and that plays very, very neatly with the thesis that we had so far. So Microsoft, just like the rest of the market, which a lot of the assets, and I would argue even the indices themselves, are actually making exactly that very exact formation of head and shoulders of sorts, which is hidden inside. Most are not able to see it. In fact, we already made a significant chunk of the right shoulder on the S&P on a smaller time frame range, and so now we're slowly going to deteriorate, and the market will go even worse and worse and worse the further out we go, even if we'll have corrective movements to the upside, which will be temporary, short-lived. But still, it's nice. Even these bull-ish periods are good for us. It keeps the market balanced and not just rushing in a particular direction and then having to correct all the way through. Remember, balanced and slow is far better than imbalanced and quick. Okay, that is very much as simple as that. All right, those are the tickers for today. I'm sorry for not being able to go on. I'm getting somewhat tired, and I want to be able to do the analysis properly and not on, one leg, if you will, not half-ass. I don't half-ass. You guys know that. But I really am getting tired, and I don't want to be giving bad analysis, right? Yeah, okay. Thank you, everybody. Thank you all, by the way. And yeah, like I said, don't miss out. Just one final spot in the Technical Analysis Academy. The way to sign up, one of the ways, and the simplest way, is you join the Discord, right? And when you do join the Discord, you'll be met with this Need Help channel, right? This you'll be met with these two channels, actually. That's kind of the lobby. The left, click me to give you all sorts of information and that sort of stuff. And when you press this, the Need Help, you have the ability to open a ticket. You open a support ticket and you write, "Hi, Greg. My name is ta-ta-ta. Let's have a call. I want to ask a couple of questions. I'm interested in the One-on-One Academy." Since the One-on-One Academy will be locked when the spot is taken, or if it does not get taken within a couple of days or so, maybe even just 24 hours, we'll see how I feel, just because over the weekend I didn't get to deal with it as much as I was planning. The academy is locked. Basically, the academy is just 1 second away from getting locked, so definitely join in. Whoa, it's like apocalypse. It definitely is market apocalypse. It will definitely be apocalyptic for the vast majority of people. Absolutely. Most people do not understand what is coming. Absolutely. My pleasure, Mikey. Mikey, do yourself a favor. Cancel your membership. First of all, I appreciate your contribution and your membership and your loyalty and everything. But seriously, cancel your membership on the YouTube. Make a membership in Patreon, and will give you better benefits in the Discord, and it's far more efficient and all that. I do appreciate every single one of you who shows up here, member, not member, subscriber, not subscriber, doesn't matter. Thank you, everyone. But, if you already want to be a member, do it the right way. In fact, Mickey, I'm not going to lie to you, I was actually considering turning off the membership partition in the YouTube, because it's just so inefficient, so very badly executed, and just useless, basically useless. So I know this may be more comfortable for some people, but honestly, Mickey, Patreon works better. That way, you go to Discord, you get the best roles and everything on that grade of things, right? And so, definitely, in my humble opinion. Thank you, Greg. My pleasure, nannies. My pleasure. All of you, boys and girls, my pleasure. You know, I really love doing this with you. In fact, I wish I wouldn't have been so tired and I would have kept on going for at least, an hour. Sometimes people have meetings with me that I just keep on going and going and going and going, and I don't even notice how time flies by because I have a lot to say. Today, sorry, still human, still healing, I guess, but I am a lot better. As you can hear, I'm doing a lot better. I'm almost like brand new, but still I'm getting a bit tired now, long days. Also woke up in the morning early, and so yeah, somewhat tired. But join us on Discord. You'll get to talk to me on this everyday basis. Ask all these questions in a more personal way. We hang out. We can hear each other properly. I can hear you. You can hear me. We can make sure you understand what it is that I'm explaining. All that sort of beautiful stuff. Alrighty, boys and girls. On this note, I am out, and I will wish you all a wonderful morning, afternoon, night, whatever you have, wherever you're at. Happy post Purim, or whatever you're having, whatever holiday. Ramadan Kareem. I think Ramadan is still going on. I think, well, no, I'm wrong. Well, Ramadan, sure, I think I'm right, but the other stuff, well, it doesn't matter. Whichever holiday you're having, happy Easter. Love you all, boys and girls. See you on the next one. Bye bye.